Joining us now to take a deeper look into the state of U.S.-China trade relationship and Boeing's effect on the economy are Peter Schiff, CEO of Euro-Pacific Capital, and Todd Bubba Horowitz, Chief Strategist at Bubba Trading. Now, Bubba, I wanted to start with you with the situation regarding Boeing. What do you make of the Treasury Secretary's assertion that this one aerospace giant is poised to cause an issue for the overall growth of the U.S. economy moving forward?
Good afternoon, Brent. Thanks for having me back. Listen, it's a big deal because they're the biggest exporter that we have. So it's going to have a direct effect on GDP, and certainly it has slowed sales, and it will allow, you know, Airbus, which is their only really main competitor, to possibly pick up some sales from there. I mean, this whole thing has been really a mess, and that's what happens when you let a company get in bed with a government agency and they get a plane out too fast. That's been the whole thing. So I think that's going to definitely hurt the GDP going forward.
And Peter, what do you think? Already Boeing has lost over $62 billion off of its market cap. Do you think there's a chance of recovery here?
Well, I'm sure over the long term there'll be a recovery, but in the short run, certainly, you know, this will weigh on our exports, which also could weigh on the dollar. You know, I've been thinking the U.S. dollar was headed lower anyway, but if we end up with bigger trade deficits, in part because we have fewer exports of aircraft, that is going to be another factor of many that I think will be weighing down the dollar and the U.S. economy.
All right, and now, Peter and Bubba, we want to shift gears, so we're going to start with Peter here first. Now, China's currency is now gaining momentum as the market is optimistic that a trade reconciliation is underway. Now, the RMB is now at 6.9 against the U.S. dollar, climbing 1% from its August lows, but it's still about 7.5% weaker compared to before the first tariffs were imposed by the U.S. in 2018. Now, do you think the market is cautiously positioning itself for a deal, or does this lack of enthusiasm signal investors don't believe that a phase one is truly going to happen despite it being signed here in 2 days?
Well, look, a phase one might happen because a phase one is insignificant. The real deal is supposedly phase two. That's the one that's not going to happen. So if anybody thinks we're going to have a substantive deal, they're wrong. But the reality is, I think the Chinese yuan is undervalued relative to the dollar, and I expect it to rise rather dramatically over time. And that's not going to be a good thing for the U.S. That's going to be a bad thing because it's going to make imports more expensive for Americans, so it's going to reduce our standard of living. And I do think ultimately it's going to push up interest rates as well, as the Chinese and a lot of other creditors are no longer lending money to Americans, and so we have to draw from our own savings pool, which is extremely shallow. It means the Federal Reserve is going to be printing a lot more money as it monetizes the debt that the Chinese and other nations no longer want to buy, and this is going to further lower the American standard of living.
Now, Bubba, it is said that the U.S. is now going to be removing China's title as a trade manipulator as part of this phase one deal. So what do you have to say to that? Do you agree with Peter that currently the RMB is undervalued?
Well, it may or may not be undervalued. The one problem with the RMB or with the yuan, it does not trade freely. So it's always pinned by the Chinese government. So you can never get a true read of what they're trying to do with their currency. I mean, they're going to keep that currency low as long as they can because, again, all they're trying to do is offset the tariffs so we keep buying their goods. I don't agree at all with Peter here that it's going to explode to the upside because their government will not allow it to explode to the upside. That is one currency that is totally controlled, that is pinned, that can only move X amount per day other than the free-floating rest of the fiat currency. Now, the fiat currency system's another story, which is a joke altogether. But in the yuan's case, I don't think that it's going to change whatsoever.
And now, Peter,
well,
I want to...
Which way? Here?
Yeah, Peter, go ahead and give us your reaction to that.
Well, I'm too busy trying to get the sun out of my face because there's unfortunately, there's a sun coming into a window here. So I didn't even get to hear what was saying. I was too busy trying to do this.
Well, essentially,
I agree.
Go ahead.
I agreed with you, Peter, a little bit, but I do say that because the yuan is so government controlled, they do not allow it to free float nor trade as far as it should in either direction, which is one of the issues with the yuan.
Well, The big mistake that the Chinese made over the years is undervaluing their currency. I mean, they did that deliberately because they wanted to maintain exports to the United States, but I think that was a key mistake. I mean, it helped America because we got to live beyond our means, but I don't think it did anything for the Chinese economy. In fact, it helped undermine it because they accumulated a huge pool of U.S. dollars that they ended up doing things with that created malinvestments and other distortions. I think the best thing that can happen to China is to simply allow their currency to appreciate, to reduce their exports to the United States because we can't afford to pay for those products, to let their own nations consume that production so that their own people can benefit from their hard work. But unfortunately, Americans are going to have a rude awakening when all of a sudden we have to live within our means, and our means have been dramatically diminished over the years. We haven't been investing. We haven't been saving. We've been relying on an overvalued currency to import what the rest of the world produces. And we haven't saved very much. We've just been borrowing money to consume. And all this is going to come back to bite us.
Now, Bubba, we are now at all-time highs in the market, but it seems that the stock market is completely divorced from the economic reality. The auto industry has contracted and gotten worse. The retail apocalypse continues with more big box store closures. The U.S. PMI has been in contraction for 5 months in a row now, and it's at the lowest level we've seen since 2009. So what is all this telling you, and how would you position for it?
Well, right now it's telling me the markets are going to go up until they don't. And if anybody thinks differently, they should go see a doctor because, again, these markets will at some point melt down. But for today and for now, they're going to continue to go higher until they don't. As long as the cheap monetary policy is in play, there's no place else to go. They have forced everybody into the equity market, which is not a good thing. And to Peter's point, however, I don't know that we live beyond our means. I mean, I don't believe that we continue to hear there's no inflation. Ask a farmer if there's inflation in this economy when their input costs are going up. In the meantime, their outputs are coming down. So there's a lot of issues here, but the markets will go higher until they don't. And again, anybody who thinks they can time that out and say that this is the top of the market is nuts because it can't be done. It's been tried, and many have been broke trying to predict the top. It will go down, and you'll have plenty of time to get out if you don't panic once it starts to sell off. But for now, the way it looks,
well,
you can look at all the reasons why we should go lower. Go ahead.
Go ahead, Peter.
I don't think people are going to have time to get out. I think this is a bubble. It's going to pop. I agree. There's no way to know how much more air they
you had time to get out in 09. You got time to get out in 01. You got time to get out every time.
Really,
you had time to get out with except for the 87.
No, because the minute it drops, everybody says the correction is over. You got to buy the dip. So I think most people are going to watch all their paper profits vanish. Yeah, look, it's going to be very difficult.
I'm not saying that they're right, Peter.
It's not just going to be. Yeah, it's not just going to be that people are going to lose dollars when the stock market bubble pops, but the dollar bubble is even bigger. And when that pops, even the dollars you haven't lost are going to lose most of their value. So I think Americans are going to be wiped out in the U.S. stock market and the bond market. I mean, people are going to be surprised at how much of their wealth they lose playing it safe in the bond market, because you're not playing safe. You're playing with dynamite there. There are no U.S. dollar denominated assets that can be considered safe right now. It is a giant casino. And yeah, people think that the economy is good because they've managed to blow more air into the stock market bubble and the bond market bubble, but the economy is in worse shape now than it's ever been. It's in far worse shape than it was before Trump took office, mainly because he continued to pursue the failed policies of Obama, who pursued the failed policies of Bush.
All right.
All we've done is spent our way into bankruptcy here.
Listen, for 150 years, it's gone up almost every decade but two. So again, you could be right, but I would tend to doubt that the United States is going to collapse because of all the issues that you pretend to bring to the party.
Tom Bubba Horowitz, Peter Schiff, thank you so much. We're going to do this again really soon because you guys are obviously fiery about this and we got to get more from you. Thank you so much for your time today.